Hey, this is Trader Travis, and I am back, this time with both a combination of an income report as well as a case study update for the 10-Minute Income Trader, which used to be called the 10-Minute Retirement Trader, but I changed the name to more align with what I'm about, trying to make income from the stock market each month in as little as 10 minutes a day, finding, managing, placing my trades in as little as 10 minutes a day. And I've been using this case study to both demonstrate that as well as walk everybody through what I call our 5-year retirement plan. This is the recreation of what my wife and I did to achieve financial independence. I will say there's no wealth without savings. It requires a high savings rate as well as getting out of consumer debt. And so that's what we did. We took a Dave Ramsey class. We got out of consumer debt. We had a really high savings rate. At one point, we were living off the person who made the least amount of income and completely saving the second person's corporate income. Combine that with investing, and you can see what happens here. I don't have the full 5 years up, but I have year 3 because that's where we're at. We're in the middle of year 2 and 3. We're actually in between year 2 and 3 as of this recording. I started this, and I'll show you my Excel here in a bit. I started this case study May of 2017. So officially year 1 ended May of 2018. But I'm doing calendar years, both January as well as keeping track of when we officially started, so people can see how long it actually takes us, not some arbitrary year 1, 2, 3, or 4. All right, so this is what it will look like if we go all the way to 5 years. At that point, we had no kids. We lived in like a 700 square foot 2-bedroom house that we had paid off, again, following that Dave Ramsey plan. So with $100,000, and you're trading for a living, and you have investments, and you're making like $5,000 a month. That's plenty for at least us to live off at that point. Kids threatened that, and so we had to build up that account a whole lot bigger. But anyway, I'm just walking everybody through year 5, and this shows you what it would look like if we go all the way to 10 years with 60% growth each year, which is very difficult. But again, that's why I'm demonstrating that, yes, we can do it with 5 years, and a lot of that comes from savings. And you will see here on this Excel. But before I get to all that, of course, everything I'm sharing here is just for, educational, informational purposes only. I'm not giving you any investment advice, just kind of showing what I do. Even still, I believe in individual empowerment, not holding people's hand, having people need to come to me to figure out what to do with their money. And that's why I wanted to start this case study to show you, hey, this is what we did. We combined a high savings rate with prudent investing, and here are the results. So this is year 2 or 3. Again, year 3 officially started in May of 2019. But as I'm recording this in November 2018, you can look at it one of two ways. You can look at it as, well, we're still on year 3, or you could look at, and year 4 won't start to May of 2020, whatever. Just know that if we use our official start date of May 2017, I am still on year 3. But again, going back to these numbers here, year 3, we're supposed to end with $40,000 at the end of year 3. And I have this 65,000 underlined here because at the end of year 4, that's where I'm supposed to be. And I'm already close to that. I'm at 60,000 here, and I'm calling it quits for the year. And you can kind of see a note here. I woke up one morning and decided, and I didn't decide, I just had a feeling, let me just close out all my trades. Enough is enough. You've more than doubled this account for the year. 98% of that is investment growth, and 40% of that is personal contributions. So again, this is what I was saying. The high savings rate was was actually the largest key component of achieving financial freedom in 5 years. If people think they can invest their way there, and I haven't found a way to do that, it takes a lot longer. But when you combine discipline, and a really high savings rate and the leverage of options and investing in the stock market, oh man, you can do wonders. And so, again, I started this in May of 2017. Let's go back to year 1. Started with $10,000, and I have publicly done this. I have the record of my trades online for free. People can watch. I started this in May of 2017 with $10,000. Here we are, November 2019, just a little shy of 2 years later, and look at the balance, $60,000. That account went from $10,000 to $60,000 in about 2 years. Did I do it overnight? Did I do it like in a month that people think? No. but it is possible, again, with a high savings rate and prudent investing. And so again, that 60 grand number where I was saying is, wow, I'm pretty much at the end of year 4. So I may accomplish this in 4 years versus 5, because I still am technically in year 3 and I'm already at the end of year 4's numbers or close enough to it. Anyway, the point is, unless I do something completely stupid, which is entirely possible, I should accomplish this 5-year retirement plan in about 4 years, right? And so we will see. It's all based on what the stock market delivers. So I am calling it wraps for year 3 a little bit early here. And so you can see here 137% gain. And I am working on year 4 position right now. So let me look at my notes really quick, because what I want to do is walk you through the moves I made. But before I do that, let's talk about the calling it quits here, because I want to dispel a myth and give you some admin notes. First admin note is there won't be many other updates to this case study because, again, I'm calling it quits for the year. I am working on year 3 and 4 trades. Here they are here. There are only a couple of credit spreads out and one insurance trade that I will use eventually for some stocks. That insurance trade was made in 2019, initially for this year's performance. I decided, no, let me go ahead and use it for next year. I don't need it for this year. Let me use it for next year. And here's those trades in the broker account. This 300 put, that's what you just saw in the Excel. These other ones are for this year. These will expire worthless. I'll leave these be. They're zero management trades, set it and forget it. And then you have 3 credit spreads here, and they all expire next year in 2020. So these, cash flow trades is what I call them. They will be used for next year's performance. DIA was for Market Club Options, another portfolio. So that's only moves I probably will make. I'll probably start trading back up in January because, as usual, every year we take an annual Christmas break or winter break. I won't call it a Christmas break. It's a winter break. I take the month off. All right. I update all my training. Ideally, I don't want to do any trading. So that's what I'm going to do. And so you probably won't get many other updates from me, except if I have to update you on the Trading for a Living account. That account, I am going to continue trading because I was worried that people might be like, well, there's nothing else he can show me to the end of the year. And I was like, well, no, I'll leave this account be and keep, monitoring this. This growth so far is up 35%. This is if you're already trading for a living, you're not adding any more money to the account, you're trying to live off of it, showing people how would you manage a larger account. So I've been walking people through that. So I'll continue modeling that until the year end, and then I will shut this one down because I started one-on-one coaching again. And so I'll work with one-on-one clients in their larger accounts, kind of tailoring this approach to whatever they do. Now, coming back here, another admin note, or I talked about dispelling a myth. Right after I close out all these trades, I pretty much went to 100% cash for the most part. Again, I have 0 trades open that I have to manage for this year. I am done. This is my officially calling it quits performance for the year, more than double the account. And a peace came over me the moment I closed out all those trades. And that's how I knew it was the right decision. There was no angst. There was only one angst. This annoyed me, which is kind of stupid. I was like, oh, why is it not an exact 100? It's 98. It's bothering me. I wanted to place one more trade to get it over 100. I know it's stupid, but hey, that's the monkey brain, what they call the monkey mind. And I just silenced that ignorance. And I was like, you know what? Golly, man. I was like, are you trying to be so greedy? I started berating myself. So I left it alone. Yes, it's going to annoy me. It still annoys me. It's just going to have to annoy me. I am moving on, right? Just because you have a feeling doesn't mean you have to act on that feeling. Just because you are worried that the market is at all-time highs right now doesn't mean you have to act on that worry. All right, so that was a key to success there. Anyway, moving on. Next thing is, after that peace came over me, I almost shed a tear. And I was like, oh my gosh. It was like a huge relief was off my shoulders. And I was like, man, I didn't realize this was weighing me down so much, that stress of having all these trades open, the stress of trying to perform. And the myth that it busts is people think this is a virtual account this year. Last year, this case study was in a real money account, but I'm using my real money account this is going to be a side tangent here. I'm using my real money account for this competition. I decided to enter the U.S. investing competition. It's supposed to attract the best investors in the world. You can read this later, and some of the previous people who won this competition study under people like investors, William J. O'Neill, and things like that. So anyway, I am third overall. They have me in the wrong division, but performance-wise, I am third overall. So I used my real money portfolio for this competition this year, and I switched over the 10-minute income trader case study to this virtual account. Well, there's a myth that people think that you manage a virtual account different than a real money account, that you won't pay attention to it, you won't treat it seriously, and I think that's a myth because if I'm shedding a tear, that shows you that I chose to manage this like a real money account. It feels like real money to me because this is a skill set. I'm using the exact same skill set in my virtual account, and I'm also using that skill set for the competition. It's a skill set. So I choose to manage my virtual account exactly the same way. Same emotions, same angst, same worry, all of that. All right, so there should be no reason you manage a virtual one different. As T. Harv Eker said, how you do anything is how you do everything. And I was telling my co-trainer, my suspicion is that the people who say, oh, if it's a paper trading account, I won't pay attention to it. And I was like, you know what? That's a habit. That's a choice. And they're probably the same type of people who don't pay attention to their real money. They neglect their real money. All right. End of rant. Moving on. The reason this performance is so high is that I have bought a ton of stock market insurance this year, probably close to $17,000 of insurance. But the moment I decided to shut down this portfolio, I started selling back some of that insurance. That insurance had already been paid for by my performance. A lot of it was paid for by the cash flow trades. I made $16,000 just on cash flow trades alone. The 3X growth strategy, I think, was about $6,000 on that particular strategy. I diversify my approach with different strategies. And then the Buffett, $8,000 on that particular strategy, the Buffett strategy. So all of that had paid for my stock market insurance for the year. And then when I didn't need it, I started selling back that insurance. And it was already factored into my performance, but it's like getting like a $4,000 rebate back. $4,000, when your starting balance on an account was 25 grand, that bumps up your percentage a lot. So that bumped me up a tad bit, and that's why I wound up being so high. So I don't have much else to say, but this is it. I hope you enjoyed, watching me through my thought process. I hope you are inspired to know that, everyday people can do this. I was joking with my wife. As a matter of fact, give me a sec. I'll pause and I'll show you some of just a personal confession of mine, just being transparent. So I'll be right back. Never mind. I can't find it. But anyway, here's a press release on Yahoo Finance about the competition. It just walks you through some of the, past performance like I talked about. And then it lists the competitors. Again, they have me in the wrong division. I'm supposed to be in the same division as this guy, but he runs he runs an investment management firm. He's up 17%. I'm in the same division as him, and I'm down here. They have me in the stock division, so I'm up at this time, was up 22. But anyway, and so they have these guys here, and they don't have it here. Like this guy, School of Business, managed funds with J.P. Morgan. Some guys went to Harvard. One of the press releases had their credentials and things like that. This one is a software engineer from Amazon. And then you have this, Travis is, Army vet from Idaho who trades full time. And I was telling him, I was laughing at my wife. I was like, man, I was like, all these guys with all these huge credentials. And I was like, I barely graduated from high school, and I felt like I didn't belong amongst them. Again, she had to lift me up because here I was beating myself up. It's called imposter syndrome. Even though your results show that you know what you're doing, you feel like an imposter. You feel like it's just luck. And so she was like, well, no, you're just showing average people that they can succeed. Average people who can learn this, who don't have the PhDs, who, are not highly intelligent, super smart, just average intelligence, right? Can succeed at this. And I was like, okay, that will be my mission, because that is my mission, to show regular people that if you work hard enough, you study hard enough, You can do great like this. And I wished I had managed my real money account like my virtual account, but I let my ego get in the way in this competition. The first time I've ever been in an investing competition, I can't lie, my ego came out the woodwork, and it was like, oh, let me show them what I'm capable of. And I took on way more risk. I broke all of my little risk formulas. I teach people, and I wound up losing a lot of money. And so now I'm trading it the prudent way, my actual way, and my performance is slowly rebuilding itself little by little. But once you make that mistake, and I always tell people, well, at least in my experience, when you lose a lot of money, if you trade the right way correctly afterwards, it will take you 3 or 4 months to recoup it. And I don't have 3 or 4 months because this competition ends shortly. But anyway, so that's my mistake. Oh, well, you all have seen what I'm capable of. Well, not what I'm capable of, really is what is capable when you trade options and you trade prudently. It's not about me. Anybody can do this if you follow the right blueprint. So that is it. I don't want to make this video too long. I just want to leave you with that, hopefully encouraging message that you can get there. I am available for everybody to ask questions. If you're struggling, you have to reach out for help. You cannot suffer in silence. Do I expect you to have double your account growth like me? No, because I've been doing this a very long time, 20-something years. So a lot of things I do unconsciously out of habit of showing up every day. But still, we're trading the same strategies. So if you're struggling with a particular strategy, I am trading that same strategy right alongside you. So I should be able to help you, work out the kinks so that your performance can be more consistent too. So that is all I have for you. You take care. I will probably be back in a few weeks with ending year-end message, maybe a interlude, because again, I'm crossing over year 3, going to year 4. This is like the halfway point. And so I have some notes and things I want to share with you, looking back how far we've come from the measly 10 grand, the meager 10 grand I started with, to where I'm at now, $60,000, just 2 short years later. So that is it. You take care, and I'll see you in the next update. Bye-bye.